Hi, welcome to this video today, which is all about catching and holding big trends in the market. So trend following big trends. Now, in terms of most Forex traders, they simply cannot hold big trends. They get panicked out early, or they put their stop in the wrong place and get bumped out. Then the trend continues the way that they thought. Now, in terms of holding big trends, just want to discuss a 4-point checklist that you can use. Now, if that checklist, all the points are in favour of one currency over another, you've probably got a big trend forming or a big trend in motion. Also, if you want to catch and hold big trends, then you must get away from thinking about pips. A lot of traders are obsessed with pips. Okay, we talk about pips, but it's not the pips on their own that are important, is it? It's basically the percentages behind the pips and the exposure of the trade. And it's very relevant. Most traders don't pay enough attention to percentages. We'll go through why it's so important in a moment. Now, in terms of the currencies I want to look at today in relation to holding big trends, are two that we looked at a while ago. We did a video on them. They are NZD CAD and AUD CAD, and we decided to sell the NZD and the AUD, and yeah, they both went down really nicely on the CAD. There's massive potential on the downside still. Big trends in motion. Okay, right, let's go and discuss the checklist and also pips and percentages in more detail. We're going to go to the charts, but please do keep in mind it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can get live access to our member center on the link beneath this video. Right, in terms of the charts, we're going to do NZD CAD first. Right, on the chart of NZD CAD daily, and just do my technicals in a moment. What we're going to do is just go through this checklist. It's very, very simple. Now, before we do, I just want to read this quote because it's a fantastic quote. I can't remember who made the quote though, but it's big fundamentals rule the long term, sentiment rules the short term. That's very true. In Forex markets, you very often have really big trends that could go for hundreds or thousands of pips. You can see the big trend when you look at the chart, but obviously there are natural retracements within any trend. Let's say in this one, when it gets a little bit too oversold, yeah, prices will bounce. What you've got to do when you're trading big trends is have a way of coping with those bounces, okay, and stick with the longer term trend. That'll become more clear as I go to the technicals. Now, in terms of the checklist, it's very simple. Anyone can do it. The interest rate outlook now and going forward. So interest rates very, very important in terms of Forex price movement at present. And if we look at interest rates in Canada and New Zealand, the interest rate outlook now favours the Canadian dollar, and New Zealand will be cutting going forward. So that keeps the interest rate outlook in favour of the CAD. Then you look at the health of the domestic economy. You don't have to look at every little bit of data, just look at the big data, and it's pretty obvious Canadian economy is doing far better than New Zealand's. Then you look at the impact of trading partners on the domestic economy. So exports basically, and exports very important in terms of commodity currencies. Now, in terms of Canada, major trading partner is the US. US economy in relatively good shape. Okay. Now look at New Zealand's main trading partner, China. China's got terrible problems, and they're going to get worse. So there again, we have a checklist in favour of the CAD. Then we look at geopolitical issues and the personality of the currency. Now, are there any geopolitical issues in Canada and New Zealand? No. I mean, geopolitical issues, I mean something like Brexit in the UK, which can override the economic data. So there's no geopolitical issues in either country. Then you look at the personality of the currency. Now, both currencies would be considered risk currencies. Okay, they're very impacted by global growth. And yeah, basically, in terms of the Canadian dollar, it's actually seen as the safer currency if we have a risk off as well, okay? Or the global economy slows up even more. Now we've got kind of risk on at the moment, but the Canadian dollar is pushing the NZD down. If we get risk off, it's going to push it down even harder. Now that 4-point checklist, anyone can do it with a little bit of practice. And I know a lot of traders, they just focus on technicals, but yeah, in terms of the chart, it's a direct reflection of the big fundamentals and sentiment towards them. Once you know the big fundamentals behind the chart, and those fundamentals are not going to turn around anytime soon, you can postulate that a big trend is going to continue. And this one has got a long way to run on the downside. Now, in terms of traders, they kind of focus on every twist and turn of the market. With this type of trading, you do not have to be. And when I talk about pips and percentages, down here you can see it. My target is 80. Could go even lower. That's weekly support. We get down to 80. That's 9.3% without any leverage whatsoever. So just 2-to-1 leverage will give you over 20%. Most traders can't make 30% in a year, okay? So when you think in terms of percentages, you realise you don't have to actually use much leverage at all, okay? Traders who, trading for like 50 or 100 pips or whatever, unless they're obsessed with that, they're going to put their stops too close. They're just going to end up getting nowhere. They won't be able to cover for their inevitable losing trades. So it is a great way to trade, okay? And in terms of finding out this data, you can actually research it out yourself. I mean, we do it on all the pairs that we follow. For us, we're always after the bigger long-term trends. I mean, you always look at our members center to see how we view the fundamentals and sentiment. But if we can do it, anyone can do it, is basically what I'm saying. It's not difficult. I'll put a definition candle here. What you're normally looking for is kind of spark into a big trend. A little while ago, New Zealand said they would probably be cutting interest rates. Well, this candle for us was a great one to come in on. And it's a nice trend to the downside. Then you get this retracement here. Now, generally, when we're trading big trends, and we think you've got a real sort of super tanker trend with the fundamentals not turning around anytime soon, like in this one, we like to use this 20-day moving average because prices will naturally gravitate back towards it to correct oversold, okay? And you have your stop back behind the 20-day moving average. Now you do eventually reach a stage where 20-day moving average will give way, okay? Now, from our perspective, we were in at 91.50, okay, and we banked out at 88.80 on stop, okay. Now, the fact that we've been bumped out, if we're still confident the trend is going to continue, we'll look to see if prices reverse. The 20-day moving average is not a brick wall, but it's extremely useful. Obviously, it gave us that nice move, and we're looking for it to continue to help us in the downtrend. Now, when we bounced up here, see that blue candle? She reverses off the 89 level, a round number, very important in Forex trading, and that red does. That red will bring us back in short. And we know this level here is a big weekly level of resistance, okay? Sorry, let me just get my line straight. So we've come back in at 88.50. We're now down at 87. Okay, so what we're going to do is basically draw another level of resistance in, a lower one, and we're looking for the 20-day and that level of resistance there. Let me just draw a trajectory in. Okay, so what we've got basically is a trajectory which lines up with the 20. We're looking for that to hold and first level resistance, and we'll trail our stop back behind the second level of resistance. So what we're going to have now, I think, is after that bounce here, we're going to see a continuation of the downtrend. Everything that we can see in terms of the fundamentals just favours the CAD. So yeah, if you're coming into this trade right now, I would risk it to 89.20. Okay, and you're looking for a rundown to 80 from 87. Well, that's 700 pips, isn't it? You're risking about 200. Also, if we break through this level here, 87, it's decisively taken out. You've got to take out the round number turbulence. So let's say 86.70. There's always a lot of order flow around round numbers. Then your stop could come down behind 88. Okay, and the risk reward is really, really good. It's over 4 to 1 in terms of downside against your risk, or your profit potential against your risk. Now, how simple is this to do? I think if you're doing it, you just got to get out of the mindset that the chart has a mind of its own, or it moves to some higher order, like a lot of people think. Something mathematical. It's not mathematical at all. Big fundamentals rule the long term. Sentiment rules the short term. Now, in relation to this, we're going to look at the other pair, which is AUD USD, which could have even more downside potential than this one. Now let's go over and take a look at on AUD CAD. I'm just going to use the chart from our member center just very quickly. This pair, the checklist is exactly the same as for NZD CAD. Obviously, Australia problems with the domestic economy. Also, its major trading partner is China, and the safer currency in terms of risk off coming into play and going forward with the global economy slowing is the CAD. Now, in terms of this pair, we're in our second trade in it since we identified those really big fundamentals. Our first trade was taken off this level here, 96, which was a weekly level of resistance. Took it on the snap of the 20-day moving average. She went really down nicely, and then she came back and stopped us out. It didn't make us as much as NZD CAD. I think it was about 160 pips, but we got a good re-entry because we came up to test the 94 level and then basically came off the level 93.30, and she comes down quite nicely. We're now down at 92, so decent profit this week, and we got our stop at 93.70. So you can see the target is 80. You can see we're at 92. We're risking 170 pips, and the potential 1,200. I'm not saying it's necessarily going to get all the way there. You've got to manage the trades as they go, but I just don't see the fundamentals that are clearly in favour of the CAD turning around anytime soon. And I think, just focusing on the big fundamentals behind the chart allows you to cope with the sentiment spikes against you and not panic. Okay, this one here, we gave back a lot of profit. I didn't think it would slice out the 20-day moving average like that on its first attempt, really, but it did. But you always get back in. 20-day moving average, not a brick wall, but it gives you somewhere to put your stop behind. And also, when you break up like we did here, and then you break back below, if you're really bearish, that's a great sign. Is it simple what we're doing here? Yeah, I think anyone could do it with a little bit of practice, and just will get you some really big trends. And you just got to think about the percentages. Do not focus on the pips. Once you switch to percentages, you've got less risk, okay? Because you're going for bigger gains, okay? So you don't need to do really big positions. For us, we're always looking at the big fundamentals, and it's very rare that you get them so clear cut. You sometimes get them, 3 out of 4, or basically there's a bit of debate about 1 or whatever. But this one is just 4 clear cut points that are important in favour of the CAD. So that is the video for today. Hope you enjoyed it. Thank you very much for watching me as usual. Take care. Have a good day.